addressed.
If you're speaking, I can't hear. I can't hear anything. If you're speaking, I can't hear. I can't hear anything. Like you're muted at the minute. I don't know if you're trying to speak though.
That explains why you can't hear me.
Oh, there you
Okay,
go.
right.
How you
Okay,
doing?
awkward. Okay, yeah, let's get the show on the road, I guess.
Yeah.
Yeah, let's
All
go
right.
for it.
Let's do it.
Just making sure everyone's in, give them time. How many send the meeting invite pretty late? When how many people are expecting? 25, right? What? Okay, save. Right. How many people we got? 19. So pretty much got everybody that we'd expect in. So we can start. Just making sure. Who have we got in? Out of curiosity. Okay, the usual suspects. Nice. All right. Hello, everybody. Hope everyone is all well, ready to have some fun today. So today's call is going to be a bit different. I do have the Q&A section and stuff like that on the side that I'll do at the end. So if there are any questions that came up in this week, if they're in the question section, I'll get to it. If not, well, should have put it in the question section. But let's see. Do we have anything there? No. So it's like the question section is going to be pretty chill. There's nothing major there that I haven't already addressed. Yeah, everything there's relatively old, apart from maybe one thing, the daily bias thing. All right, cool. All right, so today's call is going to be predominantly around making a playbook. So what that means is when you get to the chart on any given day, you want to remove the guesswork and you want to, just come in like any other day. And, trading is supposed to be boring, right? You're supposed to just come in and do the same thing every day, take your money and leave. Be like somewhat like a Forex hitman, get in and out and, leave no evidence, right? So in order to do that, in order to make sure you're sticking to your plan, you need to have a playbook. So the playbook is just a tool that allows you to have uh, the entry models that you're expecting to see on a day-to-day basis, but just visualized and interpreted by yourself, meaning that let's say what a lunch money is or whatever, but it's another thing to mark it out yourself and have an understanding of it yourself. So the idea is you have your playbook where you've already done the grunt work, you've already done all of these things, so that when it comes down to it and you see it live in the market, you can quickly refer to it. So for this call, is like I said, I'm revamping mine. For this call, I've decided to go through this process with you to show you like basically what you would need to do in order to build your own playbook. Because like I said, the playbook is personal to you. So like, there's not like one structure that is gospel, so to speak. It's about what resonates with you and how you want to lay it out. But I will show you how I do it, and then you guys can take inspiration from that to do your own. Because at the end of the day, you're gonna have to put in the work and do this regardless. Like, it's no good to me to just send you mine. Like, you need to go through, do the chart work and etc. and apply it for yourself. That's the only way it's gonna stick. Right. So I'm gonna show you mine, and I'm gonna show you the thought process behind mine. Sound good? Let's get some enthusiasm in the chat. We're gonna do some cutting edge stuff here. All right. So yeah, I know it's Thursday, end of week. We're a bit tired, but we'll push through. So Neo's infamous playbook. What does it look like? All right. Good question. Where is it? Okay. All right. So let's move this chat to the side. So my playbook. So my trading dashboard as follows, and then get to the good stuff. Right. My playbook. So for each of my pairs, I have the plays that I'm looking to play. So what does that mean? So for me, as everyone knows, I've got 3 entry models: the lowdown continuation, HOD, LOD reversal, and lunch money. Now, when it comes to trading, all I'm trying to do is, at the end of the day, I'm trying to just make my life simple. So I don't need to have too many variations of the same play when I'm having my playbook. All I need to see is like an example of a lowdown continuation that's like a textbook one, an example of one that is like, maybe a slight variation of it. So like a CPB continuation that may not have a liquidity POI, but I know is relevant based on, the supply and demand theory that was taught by Blackwatch. And then the previous New York lowdown continuation, as you all know, is one of my favorites when I can see, but it basically just takes into account overall high time frame structure, and then I apply it. So this is why, like, when you see me take trades, I don't really hesitate because I know what I'm looking for, right? So I'm gonna literally show you by repopulating this, like what that actually means. And then there's like a news section here, which at my discretion, if I want to trade news or not. Now, I don't advocate trading news because it's risky. Like, news will always be a gamble, but if you've backtested it enough and you have statistical edge to the point where you can form a play around it, then do so. But I only trade news if I'm already up in profit and I risk less. But if I'm in drawdown or I haven't got like house money to play with, I won't trade news. And I will never trade news on a funded account. So let me just say that, right? So if you want to be prepared for the news, do the work to form a play around it if there is an edge. But if there isn't edge around the news play, don't do it. Meaning, if you see on the news play, for example, that it's not likely you can take advantage of like what do you call it? Of the session skewness, meaning that it's very likely it's going to be London or Asia, then don't take the news play. Or like, you need to be sure that it's going to be a New York move. Therefore, maybe wait for after the news announcement. There'll always be opportunities. It's just a question of you being smart to be able to play them, is what I'm trying to say. But either way, regardless, this is designed for preparation. So what's an example of like what an entry looks like in terms of like if I was to populate one of these? So I've left one from my old playbook in here. So this is what I call 007 Forex Sniper. So this is basically catching the high of the week. Because, one shot, one kill, you hit the weekly move. That's why I call it 007 Forex Sniper. Now, what is that and how do I break it down? So you put your grade of your setup here. So this is one of the fields that I have. You apply the risk accordingly. So for A plus setup for me, it's a 2% risk trade. You say the kill zones that it was relevant to it. So for me, in this particular case, it was London and New York, and you just label all the criteria as follows. So the reason why I do all of this is so when I'm trading live, I know I need to take into account what is the weekly trend. Because obviously, if I'm trying to catch the weekly move, I need to kind of know that. What is the daily trend, etc., to know, okay, I am taking a trade that makes sense, right? Then high time frame POI, where am I looking to trade from? And what is my target exit criteria? So if I'm looking to, let's say, go long for the weekly move, I might be targeting the structure high, so meaning like maybe the previous week's high, or I could be also targeting uh average true range, which in that case would be the weekly range, right? So I could be targeting both of these things. Then the next thing would be like, okay, where I'm trading from, is it liquidity POI? Yes or no? Was there inducement to fuel the move? Was there liquidity to target, meaning trade towards the money? So all the things that I speak of in terms of like, when I annotate my charts and I'm talking about what you need in terms of PTLR, all of that is there. So okay, we'll get to that, Daphne. So yeah, so just all of this is just like confluences to tick it off, so that when I'm trading live, like I'm like, okay, do I have this? Do I have that? So just creating a structure for me to say that, okay, based on the previous like times I've taken this play, do I have all the criteria that was needed to be able to do it? So the trade setup. So I've got in this particular case, like I said, it's either going to be a continuation or a reversal. It can't be anything else, right? So in this case, there's multiple entries in this one from what I remember, so that's why. And then what I do on this, so like I don't know, this is out of date, but we'll crack on. Let's just put this doesn't make sense. This yeah, okay, I this is edited, that's why. Okay, let's change this. So I would also typically like mark out what I expect, what the pip availability was also. So like just for filler content because it's not really important. You'd mark out all of this as well because, like I said, you're trying to get into the routine of like what you're doing. Then at the end of the day, you mark out the execution based on like what was realistic, based on what you are looking to do, whether it's like trying to get the weekly range or target whatever structure. So then you feel the idea. Here you can put some notes in terms of like kind of emotions that you're feeling, like, okay, did you partial? Should you partial? Was it hard to manage to trade? All of these other things. And then you do your entry. It should be the other way around, but anyway, you do your entry before. So can I make that bigger? I don't know. Okay, right. This is not done properly, but we'll move. So that was the trade in terms of the actual entry. So there's a high time frame POI. Happened in New York. You look for the shift, then you enter. So there's that. This is old. You would have covered the low of the day here, but that's besides the point. Then you have your CPV continuation for the following rest of the week. And then you enter on the fib and you crack on, right? So that's an example of an old version. What the hell is going on here? That's an example of the old version of my playbook, but we are going to go through a newer version, which is what I'm building. So that's just the same entry on the 15-minute time frame. And then you just populate the rest of the time frames to get a view of the high time frame picture of what's going on. And then all the data confluences that you would have needed at the bottom. So that's like just a layout like of what the playbook would mean to you. Right? That's all I would need for me to say that, okay, if I wanted to go and trade next time and I'm looking for a weekly long, what am I looking for? Because like I said, the weekly trend was bullish, right? So I'm expecting minimum the previous week's high to go, and then to come into this imbalance. And then you just got all the session data and the pip availability stuff to back it up. Obviously, there's more stuff that we have now, like Asia range standard deviations and stuff like that, which is why I'm rebuilding my playbook, because there's other things I want to add in. But this is just like the bare bones of like what I was doing when I had my old playbook before I refined the data more, before I had all of these additional targets back then of like, what's the probability of me hitting 25 R in a day, which was like, it's damn near impossible, right? So the system and all the data has evolved a lot since I had my original playbook, which is why I'm rebuilding mine. But it's also why I'm going through the rebuild on the call, because then you can see in real time what I'm going to be doing, right? Does that make sense so far? Just making sure. Okay, so let's go through some examples of like, okay, if I wanted to rebuild my playbook, how would I go about doing it now? Because this is exactly what you guys have to do. So before I start like rebuilding specific plays like Lowdown Liquidity, Stack City, and 007 Forex Sniper, which are the three that I look to do every week, I'm going to build the typical entry models that I would take one by one, right? So let's see, which one do we start with? Do we start with, okay, let's see what's on the chart, and then I'll go with that. So if I go on the chart, so I go on the chart, let's see. Okay, today was a write-off. So okay, let me put this somewhere I can actually find it. Is there anything I can see was a CPV continuation, but okay. The only thing I can see is a CPV continuation, taking into account Asia was the low of the day. So you could play this continuation model, which you because if you know where the extreme of the day is, which we do, because this happens at midnight. So the data, what's this? It's GU. The data shows that if we're bullish, the highest probable time we're going to see that is Asia. So that's okay. So this is valid. So this is the Asia low of the day. Where is the thing? So the way I do it is like I look at, okay, can I recognize the play? Like I know that this is a continuation model based on the extreme of the day has been printed, and I'm taking the continuation. So this trade is as simple as lowdown continuation, textbook, and you just say basically TP 1, 2, 3, meaning, let's just hide this for a second. CPV, low of the day. If I'm expecting this to be the low of the day, then I'm looking to take a continuation relative to the extreme, which you have the power of 3. That's the extreme. Yeah, so I'm expecting a continuation back to the extreme for a bullish candle. And then regarding the news, so PMI was good, which is why the pound was strong. But anyway, so how would you take this? Simple fib. I know I can enter on the 50 based on what I showed you guys last week. I'll cover this. I know that's break even, that's TP1, that's TP2. So this automatically is a 2R trade at TP1. TP1 is 2R always, TP2 is 3R, TP4 is always 4R. That's my fib. So this is an example of a continuation model based on the CPV, knowing that that's the low of the daily candle. Because like I said, a trade can only be one of two things. Either it's going to be a continuation or it's going to be a reversal. If you know that you've already got this as the extreme, any retracement back into it, any move back into it by definition is a retracement. So you can take this trade because you know what this is. So this is, which is an example we've seen multiple times. like here, you know that's the extreme of the day. You wait for the what's it called, the London expansion, sorry, the Asia expansion, and then you would take that, and then your target ideally would have been this. Same thing here. That's the low of the day. Wait for the expansion. TP, enter anywhere from the 50, TP1, TP2. It's only relevant in the cases where you know, let's say Asia is most likely to be the extreme. You got your London expansion and you know where the high of the day is. Because like I said, if it's a continuation, it's still relevant. So like you can even see in these 3 examples, it's the same play over and over again. All you need, so this is an example of what I call a CPV continuation, where you have the reaction, you know where the low or the high of the day is. It doesn't necessarily need to be a sweep in this particular case, but it's irrelevant because you know where the extreme is. So just based on the principles of what price action is, if you got the extreme of the day and you're retracing into it, by definition, it's a retracement, so you can use a fib. It's as simple as that. This is a variation of a low down continuation, taking into account the extreme of the day, which is why I keep saying why this is so important, because you can't play it unless you know that, right? So as you can see, there's 3 different examples, well, 4 different examples of the same thing, right? And your target is just get to one of your TP levels. So in this case, that's a 2R trade. You would have wanted ideally maybe to get this place, and you would have been slightly greedy and missed out, but besides the point, it's fine, right? So that's like the entry model. So how does that look relative to the playbook in terms of how we're going to structure it? So let's make this nice and easy. So what do we have? We have money to trade towards, like so. So we're just going to annotate it the same way we annotate all of our entry models and everything else. Just tell the story, what we're trying to do here. So we want to trade towards the money. We want to acknowledge that this is linked with news, but this isn't red folder news. This isn't what's it called, restricted news technically. So you could trade this if you wanted to. What we're looking for. I am looking for, okay, so I've got liquidity target, check. I'm looking to split, okay, where's the high impact news thing? That's what I need to know. There we go. So I know that it has a catalyst. The reason why I'm marking this out is because it's one of the things that I'll annotate on my playbook. Let's see. Okay, what else do I need to know? Okay, right. So that's the entry. That's the trade for the day. Trade idea would have been 3R. I got missed out and I ended up taking 2, which is fine because we're going to talk about that in the playbook. So there is my CPV. Like so. Okay, and therefore, okay, so this is a textbook trade, right? So got my entry model, got everything I needed. Now, what is the data that would have supported this? The data that would have supported this would be mainly, this is the Asian session, low of the daily candle. Then how many standard deviations do we get? That's another thing. This was a bank holiday, so it's probably not the best example. Just under 3, 28 pip range. And G, 28 pip range is 30. You're expecting 4, but the bank holiday made you get less than 3. So maybe this is a horrible example to use on the call, to be fair. So maybe I will do another one because this isn't a textbook day in terms of market conditions, right? Okay. This one is. This one is, where was the other one? This one is more like a High of the Day, printed London Open. Yeah, let's do this one. Okay, so then what is left? What did this react to? What did this react to? Okay, fine. On the 4 hour, we have this. That's a liquidity POI. So then this is someone we want to trade from. Okay, so let's do this as an example. This is better. So I'm looking for, I don't like edge cases. I want more generic stuff. Okay, so let's do from the top down. So this is the idea on the 4 hours. On the daily, what does it look like? Like this, right? So first screenshot we are going to take is this one, because that's on, but let's look at the weekly as well, because we're going to put the weekly in. So weekly looks like this. So first picture we take is this one. Let's make it nicer for me to see. Right. So I know I'm going to take a textbook continuation trade. So go to here. Which one am I looking to fill? Low down, continuation, CPV model. Right. So weekly, copy paste that in there. Okay, right. Then go on the chart, go on the daily. Same thing. Nicer. So on the daily, what did I see? I saw this. Nice for me to see. Okay, works. The image. This must be so boring for you guys. I'm sorry, but this is the painful way of, this is how you'd have to do it. Unfortunately, the good thing is once you've done it, you don't have to do it again. So, um, right, 4 hour. Okay, basically still the same shit. Okay, 4 hour, we can start annotating more. So we can tell more about the story. Like, why do we want to short? Because we haven't balanced the target. Start annotating a bit more now. Imbalance to fill. Where is it? Okay, so we're telling the story. What did we have here? We had imbalance. And a liquidity POI. And a chain on the 4H. Right. Okay. Take another picture. It's picture time. Then we go on 1H. And what do I see here? Bloody nothing. Okay. You can see that this is getting more refined, is what I can see. So it's refined to this zone here. And then the sweep continues. Right. So then out of the way. And this, learn this. Right. Okay. Move this chart out of the way. It's in the way. It's distracting me. Supply 1 hour. Supply. Sorry if I'm not that talkative. When I'm like multitasking and focused, it's difficult for me to talk. I'm aware I need to be a great host, so wish I had a book of knock knock jokes to keep you guys occupied, but I don't. But I will work on this with time as I get used to this sort of stuff. Right, so that covers our 1 hour story. So let's move this for now because we're only interested in what price is showing us for now. So copy image again. Now we've got the 1 hour story. Now, this is where we're getting interesting. Now we need to see the 15M. 15M, 15M. Okay. So what's happened? So 15M as it stands is just this. Let's make this nicer for me to see. 15th of November, right, okay. 15th of November, what do we have? How many bullish candles is this? So that's the fourth one. 1, 2, 3. So 4 bullish candles going into this. That's one of the pieces of information I'm going to need to put into my playbook because it was one of the things that would help my bias here. So why I would have went short. Now, okay, right. What do I need? So this is going to be a HOD reversal actually. So I'm not going to even put it on. Okay, I know what I'm going to do here. Right. Which play do I want to put this under? I'll put it under both because it's a New York trade technically. Oh, okay, let me stick to the plan. Okay, right. So from a price action perspective, first off, I just need to put the 15-minute as it is. So let's just do that before I figure out what I want to do next. So the 15M is this. Cool. Entry after, entry before. So I need to do candle rewind. Okay, right. So where do I want to rewind to? Okay, we're gonna play this as a pure continuation, right? So what we're gonna do is the following. Where's this thing? Replay. Need to go to the 15th of November. So entry before. So the New York is the entry for this trade. So we'll go here. So Asia would have already done its thing. So before I want to do anything, this is the landscape. So far, what have I seen? So you've got your chalk. And you would have seen, so you got your chalk, so now you know supply is in control. Then you got your Asia expansion. You've had London wick, so technically London is the high, technically speaking. It did a tiny liquidity grab at the kill zone time. Then you got your proper London expansion. So low down liquidity was off the table here because that already happened before anything. Then what else do you see? You see short-term demand fail. So that's your breaker. But you see this liquidity grab here. Where is it? Where's my error? So that's a sweep. Now, how do I do this stupid candle crap? On this candle replay stuff. Nope, that's not it. Where is this button? Oh, there it is. Okay. I'll do one at a time. No, just one at a time, please. Thank you. Okay, right. Okay, cool. So this is the before. So what I'd be looking for is that fib. Let's remove this out of the way because this is not really relevant. Right. So I'm looking for an entry somewhere from the 50 to cover this because this is a liquidity POI as well as the high of the day. So let's move that there. Well, it's multiple things. It's one, Asia high getting taken. Two, it's a liquidity POI. What else is there? That's it. High of the day. And by the time we take our entry, it will be around, from what I remember, it'll be around New York. So we'll fill the data part in later. But for now, all we need is this as the before. Then you have imbalance to target. That should be a draw-in price. So you've got one FEG here, one FEG here. And so on. So that should be your draw-on price, as well as the big obvious one here. Then you know from a daily perspective and a trading perspective, once this failed, supply is in control. So if we mark that out, this is also demand failure. This is also Asia low taken. This is also I have something that says supply and control. Well, supply chain, good enough. Change that. Yeah, make my things a bit smaller after seeing people like Jacko and Viper with their super neat charts, making me be more tidy. Okay, right. Cool. So we have a complete trade idea of what we'd want to see, right? Ideally, we want to see something along the lines of this, basically. TP1, 2, and 3. We can enter anywhere from here to with our stop loss there. Now, one of the things I want to talk about while on this topic, while we're doing this as well, because it's going to help people. You want to have what they call a set process. So it's something that I saw in an interview, and I totally agree with it, which is you want to have your stop loss, entry, and take profit all defined before you take the trade. Otherwise, you can end up in situations where you get greedy, mismanage, etc. So the way to make sure you get your realized profit is to have a set process of what you want to do. So like I said again, set stands for stop loss, entry, take profit. Meaning, if you wanted to apply it here, you would have said, okay, if I knew I wanted to take this trade, what would I have wanted? I know I'm cool with an entry at the 50. I know I'm cool with my stop loss here. And I know I'm cool with my take profit here because that's 4R. So you know everything about the trade beforehand. So then you're at peace, right? That's what I mean by set process. which is in line with the fact that if you got all these FVGs to the left, you have imbalance to fill, imbalance to fill, potentially. So make another picture. It's picture time. Entry before. Okay, all right. Then go back to the chart. I did this candle crap. What the? Okay, did I just fuck this up? I think I just fucked this up. I am not good at TradingView at all. All right. So go back. So the entry actually happens here on the 50. Break even point is here. So, okay, I need to redraw this because this actually went further down in the end. So entry was at the 50, stop loss is here. And then TP1, TP2, TP3. In line with the story of we needed this to get filled. So then the time of entry was 1 o'clock. So this is the part where we start filling in the after. So at the time of entry, it was 1 o'clock. So that means that the probability of that being the high of the day, we now know to have been 86.4%. 1 o'clock, making sure? Yeah, okay. So probability of this now we can annotate. 86.4% chance. Oops. So then what else do we know? We knew Asia high taken, Asia low taken. We know the odds of that based on it being 18.5 pips, which is over here. Not that it's too relevant, but we'll just make sure we have a full process here. So 69% chance. I'm just going to round it to 70 because it's just a nicer number. Where is my trading view? That's right. Let's just do 69. Why not? Haha. I know there'll be lads in here being immature. There we go. Guys are stupid. So I love you guys. All right. So 69% chance, right? I'm not gonna say it again. Entry, right? Entry at the 50. So how would I have managed this trade live? I would have had something like this. Do I have a label for this? No, I don't. Interesting. Okay, all right. I'll make one. Entry. Because like I said, you're populating this for playbook reasons, right? You want to have this as your trading Bible, your reference. Stop loss. It's here. TP1 goes here. No, break even, more importantly, goes here. Move on to right. TP1 goes here. Oh, yellow, so yeah, a bit nicer. Oh, screw it, because I know I'm gonna have to change them all, so I'm not gonna do that actually. TP2, TP3. TP3. Okay, so now that we have all our TPs, even though they're in yellow, doesn't matter. Let's tidy this up so we can just finish the diagram. I swear. I'm gonna ignore that, Blakey. I'm gonna ignore you. Okay, just because you said that, I'm gonna change it because I don't want your shit. Yeah, I'll shut you up. Right. TP 123. Cool. Then, what do we need? That's pretty much it. I mean, there's a scaling opportunity here, so we should probably cover it to be fair, but it doesn't play out, so I don't know. Does it play out? Let's see. If it does, then I'll cover it. Fuck. Okay, it does. All right, I have to cover it. Great. Okay. So I need to do it to here. All right, fine. Okay, if you missed the first one, there's your next liquidity POI. So let's copy this and put this over here. Then label this because this is good for everybody, so I'll do it. It's also good for me. I'm not gonna front like I ain't got shit to learn. Right. Then you got your fair value gap here where it traded into. You got your liquidity POI. So you'd have targeted TP1 over here. So let's tidy this up a little bit. That's entry one. And you'd have taken 4R on the first trade. Let's hide this for a second so we can see what's going on. Make this box bigger. Overall, this is a distribution. And we're just trying to look at this fib. So we want that. This is difficult to see because of all these labels, so I don't know if I should do this or not in the call. Let's just stick to the one idea, even though it plays out. Because this would have been an example. Okay, I'll tell you what. I'll finish this example first. Because this is the trade at the end of the day, right? This trade, that's your 4-hour trade. This is an example of what I would call stack C. You got your first entry, you can partial here or whatever, and then you get your second entry and you carry on for the day. So it's basically stack city is just back-to-back fibs when liquidity POIs present themselves, which I'll do for the next play because while we're here, we might as well just do it. But for now, we have everything we needed for the trade idea, right? TP 1, 2, 3, everything was covered. We've told the story. We had the high time frame POI, which I'll label here as well. High time frame POI, high time frame POI. There we go. Right. Supply chain, blah, blah, blah. I think that covers everything I need to know for this trade. And it's clear enough for me to read it, more importantly. Right. Oh, yeah. Where's the money? Money's here. PTLR. I need money to trade towards. Like so. Can't forget the money zone. Trade towards the money. Okay, cool. How can I jazz this up a little bit? Let's see. Okay, right. What else do I need? Okay, so now all that would be left would be to get data behind it. And let's just put this over the for branding purposes. There we go. Right. Lovely. Lovely picture. Okay, I'm happy. Picture time. Right. So entry after is this. Ah, okay. One more thing we're gonna need. We're gonna need to know. probability of the R multiples for this. Even though it's a continuation model, we still stick to the process, right? So, okay, how am I going to do this? I need to figure out the probability of TP1, TP2, TP3. This is where it's going to get tricky because of the way I've structured this. But what I would do is the following. Okay, so that's okay. That's 1R, 2R, 3R, 4R. So what I'll do is I'll convert this into that so I can see it clearly, and I'll move this down. So then TP1, TP2. So okay, that worked. Oh, that's lucky for me. TP2, TP3, and TP4. The set up, fucking great. Love it. Nice. So, okay, so what's the stop loss size of this? 18.7. Just so you guys see the process, I'll do it the way that you guys should be doing it and not assume that you guys know what I'm doing. So what I'm doing is I'm going to use this now to figure out what the probability is of TP1, TP2, TP3. Because in this case, I'm lucky it's the same, right? More or less. So now it's model time, 18.6 pip stop loss. In theory, for pip availability purposes, my stop loss size was less than that, but for this, it was 18.6. 18.6. Why is it doing that? Okay. I'm on. All right, cool. Refresh. So what were my odds of hitting my 4R target? Not good. That's for sure. So this is saying I should have stopped at 3. Okay, right. So this is good because this is a key example of hindsight bias where the data says I wouldn't have seen a reason to hold to 4R. The only reason why I would consider going to 4R is, well, one, there's imbalance and there's nothing stopping me other than this, perhaps. But this isn't a liquidity POI, so this really isn't that much of a concern to me. Like, there's nothing stopping me. So I would have probably still held to 4R, to be fair, just based on price action. Like, I've got nothing to fear here. If anything, my greedy ass is looking to sell to here, me being me. So I would actually hold this to 4R. Because if I'm thinking that we're bearish and I'm looking for the weekly move, then I'm not even closing everything here. If anything, let me even reannotate it and let me be honest. I would partial here anywhere from maybe 50 to 75% and let the rest run. So that's probably important to put in the so because me taking this trade, me being honest with myself, I would have wanted to fill this because I've seen it before. Right? The week before I took the same trade. I entered here and I got out around here. So me seeing this is my target. I know it didn't play out, but it doesn't change my process. I'm still gonna do it. Because just because it didn't work out one time doesn't mean like it's invalid. Like, no. So, okay, right. So let me retake this picture because now I need to annotate this where I know TP1. This is going to be messy. Okay. Annotate it like this. Yeah, okay, cool. This is now clearer. Okay, so we have everything here. So what I'm going to do, annotate all of these now, and then that is a complete, almost complete entry model and playbook example. Anything that's left now is to populate the end part and then journal some thoughts. So data says what? Data says 92.8 for 2R. 92.8. Data says for 3R, 75.4. Data says for 4R, 55.9. Better than a coin flip. Not too bad. At least we know the numbers so we can make an informed decision rather than someone tells you think in probabilities, but don't have any numbers because like numbers are overrated. Really annoying. Anyway, we digress. So we have everything we need. I'll leave this here so people can see why it makes sense. Tidy this up a little bit because this is supposed to be 4 on the dot. So either I haven't dragged it enough or what, I don't know, but there we go. Before I take my picture, like so, drag it across, make it nice and easy to see. Right, and bring this to the front. Okay, this looks complete to me now. I don't think I'm missing anything. I've got that probability based on data. I have my targets based on data. I've got my entry model based on the mechanical magic fib. Targeting liquidity, trade towards the money. Yep, looks complete to me. Okay. Thank you. Optimal exit time, 3 o'clock. See, this is the beauty of the community. There we go. Thank you. Thank you, thank you, thank you. Optimal exit time. There we go. And that's roughly 3 o'clock. So do not overstay my welcome. Take my money and go. 3 to 5 p.m. ideally, depending on range. So, okay, now it's complete. So now that we have all the data back in the idea, once we put it into the play or whatever you want to call it, then we start piecing together the data that supported this idea. So it said you want to be a hitman in this Forex game. You want to get in and get out and no one knew you were around. They see, the victim, which is the markets, and, all you say is, oh, he fell down some stairs. You didn't see nothing, right? You were never there. Okay, right. Now, this is the really, really, really shitty part. I don't like to do. We will do it, but like I will do the easier parts first, which is this. So, this is an A plus set. This is an A setup, not an A plus setup. It's close to an A plus setup, depending on if you cover the high of the day. But for illustration purposes, I will leave this as A. I don't actually take B. Can I delete this? I don't even take B setups. Yeah, okay. A. That starts at 1% risk. Kill zone, New York, not Asia. Ugh. New York / London, because the high of the day is in London, but you're entered in New York. So I'll just put both. Weekly trend. Good question. What was the weekly trend? Shit, which one was it? Okay, this one. I need to relabel this. I put it on Euro. It's actually GU outcome. Wait, this is formula driven. How did I do this? I can't even remember now. How is this formula? Blah, blah, blah. When, if R take, okay, so I need to do, this is automatic. I don't need to mess with this. 15th of November, set up, blah, blah, blah. Weekly trend. What was the weekly trend? Weekly trend was bullish. but it's a counter trend play. Weekly trend was bullish. Daily was what? Well, the weekly in the short term is bullish, but overall it's not. I'm taking this as a retracement. This is where it gets subjective. And these are the things I don't really focus on too much because at the end of the day, I'm just trying to get paid. I don't care about the whole semantics of this stuff. Daily is definitely bullish though. Weekly can be considered bearish. I'd say weekly bearish, daily bullish, 4H trend. Next question. What is the 4H? 4H before the entry was bullish, but there's imbalance, but we'll still label it as what it is. Because I'm interested in the high time frame. So this is also bullish. This is also bullish. This was bearish when we entered. Candle bias bearish. High time frame POI, 4H and 1H, and daily. And was it weekly too? Can't see the sweep. It's definitely daily. You can see the sweep. Yeah. Okay. So the high time frame daily POI. High time. Okay, which I have. Cool. Trade exit criteria. Fixed TP target. Liquidity POI check. Inducement. Pretty sure there is. Let's double check. Yeah, that's inducement. I'm gonna have to take another picture. For fuck's sake. Okay, I'm gonna have to go back and do that again. This is so fun. IRL to target. Yes. Okay, there is. Imbalance, yes. Previous day violation. Good question. Is that? Oh, okay. No. So I leave that one alone. Fundamental news. Was there news? What's this? Yep, there was inflation. And what's this? Retail sales. Yes, there was news. Right. So we put that in the journal too. Fundamental news, yes. Scaling opportunity, yes, there was. Entry time frame. That was on 15, I believe. Yep. Oops. 15M, entry model. Continuation. Trade setup. Continuation. Stop loss size, 19. That'll be on the course, way too much. Okay, I'll address it at the end of the call quickly, but it's not that important, Daphne, because it has a lot of false positives, which is why I use it loosely. What was the pip size? I forgot. 18.6, right? 18.6. 18.6. 2R probability, it was 92.8. 92.8. Three R was 75.4. 4R was 53 point something from what I remember. 55.9. 55.9. Oh, great. That means I'm going to have to go on the tool and do this shit now. I hate journaling. Big up TradeZilla. 38.7. Now I remember why I automate this stuff. 12.1. So this is reason why you would not go for these targets because they're very low probability. And the 10R that people allegedly hit every day, 5.9%. Good strike rate, bro. Right. Are taken, are available. Okay, are available. Yeah, so what was the total are available on the day? It's the better question. So how much R did I miss out on? Nothing. Yeah, on the day, I only hit 4. So, okay, perfect execution. Good job. I'm gassed. Taken. 4. Available. 4. Execution. 100%. A plus. Lovely. 4% gained. $40,000. Now, data confluences. Cool. Okay, that was painless. Right. Okay, let's start filling this in now. Okay. Is this new? Or is this my old one? Looks relevant. Okay, right. Copy. Yeah, it looks right. Okay. So one, I need my dynamic risk table to know how much risk I'm playing. I need, so in steps, what would I need to see first? I would have marked my Asian range. So let me go find that. Where is my Asian range data? Over here. Copy, put that in there. This took a lot longer than I expected. The call is almost over. Damn. Did not expect this. Are you guys not entertained? Gotta love journaling. It's amazing. All right. Oh, okay. No, I'm forgetting something. There was another piece of information I wanted to put into this trade idea. Let me not forget. Bullish candles. 1, 2, 3. So this is consecutive day number 4. So I'm looking for this. No, not this one. I need to go on the website. Where is the website? Don't have a website link. Shit. Need to find one. Okay, we'll just go to projectlowdown.com. Nope, that's not what. No, I didn't want to do that. Shit. Okay, hold on. I have it on my other window. Drag it across. Projectlowdown.com. Okay. Where is this thing? Daily candle consecutive thing. There we go. I need this one. Day 4. So there was an 88.6% chance that day was going to be bearish. Okay, so I will put that in my notes. So that was supporting the idea. Then we need the session data. So we'll go and use this nice new stuff we have here. That will be on the site soon. I know everyone's been waiting. We have 10 pairs to put here. So this is the reason why it's taking time, because I have to watermark all of them. So please bear with me. There is a reason why it's taking a while, because it's like 10 times the work, because I'm redoing GU and EU, but now I've got 10 other pairs I need to do as well. Oh, I've got the screen recording thing in the way. I need to move this somewhere else. Okay. Oh, if you are wondering what this is, this, or thanks to Bilal if he's on the call, this well, this is just basically showing the percentage chance of it being in the first 3 hours, like I say. So for Asia, it's 70%. For London, it's 80%. For New York, it's 74%. So this is just validating what I told you guys. So I'll put all of it in. Oops. So we needed this. This is probably arguably one of the most important ones you needed. So that's there. And pip availability tool we need in there as well. We need this. A lot of data. A lot of data backing up one little trade idea, right? What else? Technically speaking, we could have this, and where's the other one? Fibonacci stuff. If you want to go overkill, Fibonacci analytics, because it was a continuation trade, so you have to know why you entered where you entered, as well as why you put your stop loss where you put it. So that gives you confidence to know why you put your stop loss where you did, and then why did you only target 4R? Because you're not trying to go to the moon, because you know ultimately this game is about being paid. So this is what's important, being in the blue. And this is what I'm going to keep stressing to you guys, because I know I suffer from it too. Being a smart money trader for so long, you're conditioned to try and go for these 10R because you're like, oh, but it could. It could, but like, who cares? Like, just focus on getting paid. NPNL is what's important, not Instagram clout. Okay, right. That is pretty complete. Only thing you would have wanted to say is like, okay, journal your thoughts. I don't know. The only thing that I can think of I would really want to write is fourth, what's it? 3 consecutive days. I hate this keyboard. What, does this not work on? Okay, maybe not. 3 consecutive bullish days. Chance of fourth day bearish equals 88.6%. Supporting short bias. Right, and then does this look robust to me? What was the Asian range? I'm curious. Why isn't it? Oh, is it because it's that far back? No, it should tell me. Where is it? Oh, I'm hiding it. That's why. 18.5 pips. Rounded to 20. So I could have been expecting 5 standard deviations. I don't need to know it. I have enough. Don't need to overkill it. I had enough stuff on my chart. Don't need any more. Right. Okay, I'm happy with that. What did I just do with GU? Okay, yeah. Right, I'm happy with this. Yep, covered that, covered everything. Cool. Just make sure. So now let's just review the whole entry. Font size, pair, date, etc., etc. Everything that I needed. The execution grade, etc. The little notes. Potentially hold a runner for the week to do damage. Okay. And that is a nice complete entry. Okay. That was long, but I think it was good to show you realistically, like, just one play took an hour and a half to do on the call. So it's going to take you a while to build this playbook, but the beauty is you only have to do it once. So then the next time when you're looking to trade and you're like, okay, I'm looking for a CPV continuation, you're like, okay, cool. Does it look like this? Does it have all the criteria I need? Because if you see this, like literally back to back, that's a slam dunk play. You've seen it happen, you've got proof of it happening, you've analyzed it, so you know that you can interpret it. So then you're like, okay, cool, hit it. Having this to hand gives you confidence. When you don't have stuff like this to hand, you hesitate. You're like, is it this? Is it that? Like at the end of the day, the whole point of backtesting, etc., is because you say you are expecting history to repeat itself, which we know it does, because if it didn't repeat itself, right, this wouldn't be true. But you can clearly see history does repeat itself. So the whole point is you have a reference guide outside of just the data, of you applying the data. So you don't hesitate and your execution is better. That's the whole point of the playbook. Furthermore, with the playbook like to hand, you're not going to take stupid trades because you're only going to take what you recognize. If you don't recognize it, you don't touch it, because it's not an A+ setup if you can't even identify it. That's the whole point of this. This playbook keeps you honest. Like you might see some variations of it, but like, you know, typically for me, I have two to three examples per play, depending on what it is. Like if it's like a low down liquidity, I'll have multiple examples, or Stack City or Forex Sniper. If it's simply just the entry model, I only need one of these. I need one of these, one for, because at the end of the day, I'm not trying to beat a dead horse. Like I only need one CPB low down continuation. I just need one previous New York continuation, HOD, LOD reversal, maybe one buy, one sell. One breaker version, meaning I don't get the retest, I just use a momentum entry. I need one example of that. I need one example of a lunch money at the first standard deviation, another one at the second. Maybe I take one lunch money buy, one lunch money sell. And then at my discretion, if I want to, I will trade news. If I can see there's an edge, meaning I know there's a play on NFP that usually works out for me. But that's big if, right? You have to do the testing on that. Don't just do it the one time and be like, okay, it works. Like, no. Like if you can't do it consistently, then don't bother. Because red folder news, especially if it's restricted, will always still be a gamble. And we're not here to gamble, we're here to trade. So if you're up and it's a personal account and you feel like it, go for it if you want. But if you're not up and you're in drawdown, when it's news day, you go to your chart and you close it. That's what you do. You don't trade. You don't do nothing. You wait for the high probability stuff, because you have not earned the right to trade news. If you're in drawdown, the news day is not going to be the day you get out of drawdown. The news day will be where the market says, finish him, and then you blow your account. So don't do that. Right? Okay, right. So that is a play. Now we can get to the Q&A, and I'll address Daphne's question first because she did ask patiently and she's been patient. So I will answer that one first. So she wanted to know about previous day low and previous day high. Now, so she's referring to, and I'll show you this, and it's probably a good way of addressing this. So where is this thing? This one. So this one, be very, 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 very careful. It is good and it is bad at the same time. I'll explain why. So this is an example. This is why it's important to have someone who, one, did the data, but can interpret the data to explain it to you, right? Because you have to be careful with this stuff. So let me explain. So all the data is saying, so I'm going to delete this. Okay, no, before I delete this, let me just say what Stack City would have been here, because I'm not going to do it. So Stack City is literally when you enter the first one, and you get paid and you have a runner, so you'd have taken your 75% partial. So you still have a quarter running. And then this is liquidity POI. So literally hit it again. Same entry. And the beauty of this one is you can literally wait for this candle to close because this is the 50. Stop loss at the magic fib line, TP 2R guaranteed. There you go. So then overall, across these two trades, you would have had 7.3R. That's Stack City. Just in case you're wondering what Stack City is, that's what it is. Another example. Punts. Well, okay, this would be, well, you wouldn't trade this. Well, no, yeah, it doesn't happen often. Like, it's rare that you get two opportunities to scale in like this, as you can see. It doesn't really happen. Like that one you get in, this one is spread hours, you can't trade. So yeah. Anyway, right. Previous day, you're going to get distracted. Previous day low, previous day high. So what is the data? The data is the following. Where is it? Just had it open here. Right. Let's move this so I'm aware where it is. Where is GU? GU. Yeah, right. What am I being shown? What's this? What is this? Ah, okay. It's him telling me off. Right. Yep. Will do. Okay. Okay. I will make sure I have a reading list for next week's call. Right. Okay. So previous day low, previous day high. What is it? So basically, it says when the previous day, let's say low gets taken, there's a 70% chance over the last 16 years that you'll get a follow through, meaning the day will close bearish. Now, you have to be careful with this, and I'll explain why. So, okay. So for example, a day like this, it works well, right? Because then this day it concluded bearish, bullish, and it's relevant in terms of it's good for the edge in the sense of, if I was to mark this out like so, previous day high violation, right? So the previous day high got taken. So we know based on this and the overall statistics that there's a 70% chance that we'll have a bullish day. So it works in trending conditions, right? But at the same time, it's like, you know, how useful is it? Like by the time you see it happen on this day, the day is over. So like, do you care? No. But it's nice for days like this and this. But it's bad when you get something like, where's a good example? Yeah, there we go. This. So let's copy and paste this. This is why it's like using it as a data confluence. It's like, okay, but you have to do it in line with price action. Price action comes first. So in cases where you see like sweeps and stuff like that, then it can give you false positives. This is why I don't put a lot of weight on it as a thing. The last example is bad because we had a low violation first. What do you mean? Yeah, so exactly. Okay, a perfect example. Yeah, exactly. And you have this as well. That's why I particularly don't, like, I don't put much weight on this. I'm aware the statistic is true, but it doesn't mean that, like, you know, you lose sight of price action. And like I said, there's false positives. So I am careful with this because, like I said, we know that liquidity sweeps happen. So with that being said, just because I'm aware of the statistic and it played well here and here, but it also doesn't work out here. It doesn't work out here either, right? So always mark out your high time frame POIs first and then look for your price action confirmations because the high time frame will always dictate what's usually happening, not these little statistics in random places. But like I said, you know, it does have weight based on logic anyway, because if you're expecting, you know, a bearish day and the previous day concluded bearish, then it makes sense that you would expect the following data to chase it. So like, for example, this. But then, like I said, you see what I mean here? You get a sweep, then it realigns bearish. So don't put too much, even though the statistic is right, don't put too much weight on it because it can lead to like getting your bias wrong. So don't dictate your bias on it. Just see it as like if you had a bias and you're looking at it based on price action, meaning, okay, who is in control? Supply. Where is your last liquidity POI? Like somewhere here, right? Where was the last, where's the supply chain? That takes more precedence over something like this. This is a nice to have, but what you need is supply or demand holding. The more important question when it comes to your daily bias, and this is the most important question for me when I'm trading, is who is in control and trade towards the money? Then does the data support these two because the data doesn't lie? That is how I form my daily bias on a day-to-day basis. That is how I decide how I'm going to trade. I don't let one random statistic dictate everything. Like there is no one statistic that will dictate your bias, right? Also, look at the way that we order this. The data is always at the end. Who is in control is telling the story. Trade towards the money. The market is based on liquidity, so that aids the storytelling. Then the data confirms the story. This is the order you should be looking at price any day you're trading, not data doesn't lie first, then look to trade towards the money, then ask yourself who's in control. Right? So remember this order. This is the way you should be framing your daily bias in your day, from left to right. So I hope that answers your question, Daphne. If you're still on the call, don't know. But yeah, I've addressed that. Okay. It's 9:30, but I will still answer questions. So let me see the questions channel if I've missed anything. Daily bias. I've answered that now. Fear says struggles. Backtesting a lot, blah, 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 not knowing when to stay out. Yeah, well, all of this is linked to not having a playbook. If you have a playbook, you'll just follow it. So the playbook today answers this question. Have a playbook. When you're looking to trade your playbook. Don't trade anything else. That's as simple as that. Was your daily bias for EU and G bullish there? I didn't have a particular bias in terms of GU and EU today. I was going to stay out until I saw the news, which is what I did. And then if I saw an opportunity to take a trade, I was going to take one. So the ideal trade I would have wanted, but I didn't want to risk it because I didn't know how volatile the news was going to be. So I wanted this. Because I suspected that this could be the high of the day. And then I saw this. So I was like, okay, if I'm going to trade towards the money today, where is it realistically going to be? It's going to be here. But I wasn't willing to risk getting slipped because I wasn't really sure how volatile PMI is because I don't have too much data on it. So I didn't take the risk. But in hindsight, the trade of the day was literally this. Mechanical fib. Stop loss here, TP, get out, 2R. Stretch 3. But get out at 2 and more than enough. Because at least this has PTLR written all over it. Because from a weekly profile perspective, Monday's still the low. We've broken structure. With broken structure, I can see buy side liquidity like this. Had another sweep to get liquidity. We've mitigated the place where you'd argue the structure break was, because this was protected at one point and now it's not. So now you're looking to long from here. and then there's liquidity. So this idea made more sense. Then also, oh, I need to remember there's something I wanted to touch upon. What's this? That's not okay, that's not for me. So looking at this, like from a structure perspective, we should be bullish because that broke. So question is, where do we want to long from? If we're going to long from anywhere, it was going to be here. When we saw these breaks, that suggested to me that this was going to be a weak high, which it was. But then after the sweep, I wanted to get a pullback. So I was trying to take the pullback play, as well as also hedge in the case of this is just a Thursday high based on news. And then we're still going to come and liquidate this because I'm interested in this area. Like even if like long term, we're not going short. If we're going to come back to this for mitigation reasons, I want to be able to be in that trade down because this I really want. I want to take this out. So that would have been how I would have played the day on GU. EU was messy as hell, where Tuesday's still the high of the week. Look left, we're still bullish. This is still holding. So if we are saying that this is mitigation, this didn't form a lower low. So then this high, technically speaking, we would say is weak. But at the same time, it's Tuesday, it's the high of the week. Wednesday is the low of the week. So it's kind of indecision where we could say, is this going to be a bearish week or bullish week? We don't know. And then when you look at the daily, where did this react from? It reacted from a high time frame supply zone. So because it's an indecision, I was just looking to play both sides. So meaning if this day could potentially be short, I'll take it short. If it could be long, I'll take it long. I didn't see a long opportunity, so I waited until after the news in general. And the only opportunity I saw after the news was a short. I didn't see a long beforehand. Is the only long that you could have taken. But it wasn't valid for me because I wanted the Asian expansion. So this would have worked, but I needed the Asian expansion, which I didn't get. If this had wicked first and then came down, I would have taken it, but it didn't, so I didn't take the trade. Because I had a feeling that this could be low of the day. That would have been the ideal trade, but didn't happen, so no trade. And taking my 2R and ran. Because it's a bank holiday and I'm not looking to stay here for a long time. So what did I do? I took the short. Why? Because I thought this was a protected low. So once I got indication that demand was failing, then I started to think, okay, well, it probably isn't. So then I got in short. Where did I get in short? I took a breaker model here. I took it. Where was it? Yeah. When this happened, because I saw this reaction to this, I said, okay, well, I think there's liquidity here. I can see supply holding, so I'm like, all right, screw it. I'm gonna short. If I'm wrong, I'm wrong. But I know I've got enough room to get break even because I expected at least this was gonna get run. So that's what I did, and yeah, I tried to play low down liquidity, got out here, and then it did whatever bullshit it did. So, but yeah, not much to trade on this bank holiday. So, like, just get in, get out. Don't try and hold crazy stuff on a bank holiday. Tomorrow is probably going to be quiet too, so my week is probably done, to be honest. But yeah, just be careful, basically. And yeah, that's it. Is there any questions? Well, I don't see any questions on the Q&A, and A, and everything on the on the channel I've already addressed. GJ played nicely out. GJ. Oh, that's a money fib right there. That's a money fib right there. That is money. On the 50, TP 1, 2, 3. 1 and 2, easy money. That's a 3R play all day. That's a 3R play all day. Magic fib time. There you go. The reason why I like this magic fib is because it works on every single pair. And it's mechanical because it's always the same. Enter on the 50, break even here, TP1, TP2. Because like I said, and that's 3R. Because like I said, you don't need much to be profitable in this game. 2 to 4 hour a day keeps your 9 to 5 away. I'll keep saying it and I'll keep showing you how easy it is with this new fib that I've like refined a bit more to make trading easier for everyone. Because a lot of the questions I was getting was, where do I enter? Do I enter here, here, here? It's like, okay, cool. Here, you have a rule-based system now, right? You look for liquidity POI, check. Ideally, you want it to fail or whatever in terms of like to be in line with order flow, and then you either, damn it, you either take trade like either from the low of the day or this, enter at the 50, get out at 2R the next day. Doesn't matter about stop loss size. Entry here, stop loss here, TP1 is always 2R. Nice and easy. Like once you start conditioning yourself to see this, you can't unsee it. I mean, I don't know. I don't even trade GJ. Okay, so this one doesn't work. So then, okay, do we get another fib here? No. So GJ didn't give any opportunity here. But GJ is one of those pairs that you can actually trade in Asia because you know that it's like, well, one, it's an Asian pair. Two, let's find an entry in GJ. I'm actually curious now. That's a CPB continuation, but I don't want to take that. But I can take this one. That swept, that should be protected. Enter 50. Wait for that candle to close. TP 1, 2, 3, and you're out for the day. And the beauty of it is the fact that it's mechanical and you can enter mid candle. And then you know your entry is always structured. Damn, GJ doesn't come back, does it? What the hell? That's a sweep. That's a retracement into it. And you would need this to fail, this demand chain to fail, which it does here. So the concern for you would be, is this demand going to hold or not? I'm not too familiar with GJ. I mean, I can see this in hindsight, but the worrying thing is, how do you know this isn't going to hold? Unless there's something on the high time frame here that would make me want to say that it's definitely a sell. Is there? I don't know. Even if you, but this is the thing also, like with this fib stuff, sweep, whatever. You could be a 4H trader and still do this. So it's like, you know, the beauty of this fib is just like if you can restructure and know what a retracement is, you can, you know, somewhat take the piss. And then just get your 4 hour, your 2 to 4 hour a day. But the fib is more powerful than you guys think, honestly. So yeah. I encourage you guys to use it. I mean, I use it a lot for gold because I can't trade gold without a fib because it's just too volatile. But at least the fib gives you opportunity to get in ways that like you wouldn't be able to get in otherwise. Like you could take that on the fib. You can take that on the fib. You can take that on the fib. Like when you see gold from the perspective of a Fibonacci, it's a lot easier to trade. But when you see gold without a fib, like good luck trading it because like it's going to be a tough time for you. I promise you that. But gold on a fib is pretty nice. Anyway, I digress. Any questions? If there's no questions, we can wrap it up. And we've had a good session. We learned about the playbook. The only thing I would want to end on is mindset. So this is important. Hold on. This question. What question? What question? Oh, hold on. Can you clarify what you mean by Asia expansion? Okay. Okay, yeah, thank you. Good point. All right. I want to talk about this. GU, right. Why is the Asian expansion a rule? Why, well, a rule of mine? Why is it important? So look, every single day, let's just look like holistically here, right? So let's remove this for now. Anytime you see the real move of the day, what usually happens? Like we can do 10 days, and I guarantee like maybe 80 to 90% of the time, the move of the day happens after the Asian expansion. So this one, inconclusive because fuck all happened today. This day, Asia expansion when happens before the real move. Asia expansion 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 happens before the real move. You get the point. Over and over and over and over again. So what does that mean to us? Like, well over, well, how many days is this? 15 days, right? I can't see any day out of these last 15 where the move doesn't happen after the Asian expansion. Maybe the only argument, no, because this one, if I go on the 15, it probably happens after. Like really look into, yeah, see, it even happens here. So basically 90% of the time, yesterday and the day before. No, because you could have taken this trade. So that happens after the Asia expansion. So that's not true. And this one, same thing. Asia expansion, take this trade. So, yeah, every single day, out basically the last 15 days, the move of the day, the real move, is after the Asian expansion. So what does that mean to you? It means when you're looking to trade, this is what you should do. You don't FOMO, you literally go like this, Asia high, Asia low, set alert, so and do fucking nothing. Go do something else until you alert pings. You're not missing out on anything. Because you can see the real move happens after anyway. Right? Like this happens, you could have taken this continuation or even this one. Because this swept liquidity, so you could have taken this fib. Don't like that one? Fine, take this fib. Either way, you're in. TP1, TP2, done. That was your day. After the Asian expansion, this got swept, then you know you can get involved. So the Asia expansion rule is good for that reason, because like you can see, and it's not just EU, it works on GU too. Oh my lord. Yeah, okay, right. Asia expansion, then you would have went short. Asia expansion, then you would have went long. Asia expansion would have went long. You know, had to wait for the Asia expansion to do whatever, because if you sold this, like, well, is it worth it? Is the question. If you sold it, where would you put your stop loss? The only logical place would be here, but then, like, do you get to no. So was it worth it? No. So what was the point? So it's like the Asian expansion is a good way of stopping yourself taking unnecessary losses. Because when I did the analytics for my trading, I'm very profitable in London. I'm very profitable in New York, and I'm negative in Asia, which is why like I don't do it often, and I'll need like a crazy special example. But even then, when I'm doing it, it's still like a bad habit I need to knock off, because the statistics, like me, this is why I'm talking about it in the call. The statistics are not in your favor, right? Because even when Asia is the high of the day, it doesn't mean that you have to trade Asia. Look, Asia expansion happens and then you can still get in. So why are you being impatient? Asia got taken out, then you got your retracement, then you had your 1, 2, 3, 1, 2, 3, ABC setup, nice and simple. Boom. TP1, 2R, cool, you've done well. TP2, oh my days, big money, big man take. TP3, 4R. It's as simple as that. Because there's no guarantee that any of this would hold until you carry on breaking stuff to the left. Like the nicest trade is when you know that all of the demand is failed. Then you know this is a CPB. Then it's like, okay, where are you looking to trade from? If you were to say that, okay, this was a mini sweep or whatever, up to you. That's like at your discretion. But you could just literally just go from the extreme of the leg, take the 50, because you know for at least sure that this is an extreme. So any retracement to it, any movement back to it has to be a retracement. So the ideology behind why you're using the fib makes sense. You enter on the 50, which is good enough for the rule. Your stop loss goes here. Your TP1 is here, and you get it the next day, and there's your 2R trade. Okay. Do you archive one playbook every... No, do I archive one playbook every day as stated in the playbook? No. So I just look at, wait, per day. No, so when I do end of days, like I will tag my setup so that I can track the statistics of it, but I don't like go and do an hour and a half mock-up of this every day. I don't have the time. I'll just like either go on TradeZilla and it's automated for me. I'll just tag it as whatever the play was, and then I just look at the analytics of it. But I don't need to be marking it out like that every time. Like I'll do it once for the playbook, and that's it. I'm not going to do it again. Once I've marked out what the setup is, then the question now, all I care about is the analytics of it. So I just want to tag it so I know how is it performing versus the rest of the playbook. So then if I know I'm very good at, let's say, CPB continuations, I'll focus on them. Or if I know I'm good at previous New York continuations, I'll focus on them. Or HOD, LOD reversals, my A plus setup. If the data is saying that's where my money is, then maybe I prioritize them. But at that point, like I said, I'm interested more so in the analytics, not like mocking up. I know what the model looks like at this point, so I don't need to mock it up over and over again. If that makes sense. Okay. November 17th example. November 17th. On what? On EU or GU? November 17th on EU or GU? GU. Asia expansion. By the time you get to New York, what's happened? Supply has failed. So this ends up being a CPB. This swept liquidity. So by definition, we're expecting it to be what? A protected low. This formed at the London kill zone. So it's likely to be what? The low of the day. Then New York comes. So what can you expect? To play a continuation. Like so. Entry, TP1, TP2. You get 2R for the day. And that's it. Textbook. Why would you have targeted here? Well, equal highs. What do? We trade towards the money. PTLR. Nice and simple. The Black Friday sale is still on TradeZilla. It ends on the 24th, which is tomorrow. From what I remember, it's 22nd to 24th, which I'm pissed about because I paid 300 and something for it, and I think it's 2 something. I don't know. If you're unlucky, Ouch. Could there have been a valid loss if you're assuming it would go short? Well, you've got nothing. How would you have taken this? Because when this doesn't form a protected high, you just end up getting equal highs here. So this isn't a nice POI to go and say you want to go short because it's left this. But I mean, if you did see that as a POI, then you would have taken this fib, taken that loss, but you would have made the money back and then took the 2 hour trade. So you'd be net 1 hour for the day. But I mean, there was no liquidity POI, and it formed, a money zone, which doesn't help. So I wouldn't be happy putting my stop loss here, to be honest. Like the nicest days are when you see some, like this is a nice sweep where that's manipulation, so that should be protected. Like ideally, I don't have enough data on candles like this, where it's like, okay, this is an open candle. Does it really exist or does it not? I don't know. So I don't really know what this is, but I do know that this is a sweep that breaks something. So I'm not sure about this candle, but I know that this is a sweep that breaks something. So this is a valid POI. Same with this. I know this is a sweep that broke something. This sweep broke structure. So this should be protected. So when I see Asia do stuff like this, a sweep that breaks structure, I know I can take it seriously to long from. So like Asia does nothing, so it gets screwed over. Ideally, you want to see some sort of sweep before breaking structure. Does it sweep anything? Not really. This is just a hard day to trade overall, to be honest. Asia, what does it do? It broke this, but it's not good enough for me to long. I wouldn't be in this trade at all because there's only demand. So the only way you could have taken this trade, in my opinion, would be a previous New York continuation, because there's nothing on the day for me to work with. Only thing that I have is we're bullish. This is a liquidity POI. Ideally, you'd want this to break first and come back down, but given the timing and etc., I could take this trade, enter on the 50, break even here and go. But anyway, yeah. I hope that answers your question. Okay, let's round up because we are over. So what I wanted to just touch upon or finish it on is, in trading, when you do this sort of stuff, people won't understand you. People will doubt you. People will be naysayers. Family members will hate on you. Family members will not support you. Some family members will. But my point is, like, naysayers are going to be here whether you like it or not. At the end of the day, you live one life and you dictate how you're going to live it. You are the director of your story, right? So put on a show. Someone's going to see your life or you're going to watch your life back. Make sure it's a fucking cool movie, right? Because you get one shot at it. Don't live for anybody else. Don't care what other people's opinions are. Everyone teach their own, right? You're in this trading thing for your own reasons, for your own why. If someone is small-minded because they by whatever creed they live and they believe trading's a scam or whatever, kudos to them, cool. Let them jog on. At the end of the day, you know what's possible. Through your own backtesting and your hard work and etc., you know what you're capable of and the opportunity that's out there in this trading game. So just ignore them, because at the end of the day, what I found is now they see you're successful and etc., now they're interested. But back when you were struggling, doing all the backtesting and etc., trying to make things work and stuff, they will laugh at you. They will doubt you. They'll hate on you. Now who's laughing? So at the end of the day, do it for you. Don't care what other people have to say. The results speak for themselves. Let the results do the talking, right? And ultimately achieve the end goal, which is live your life. Because it's crazy how people act. And I'm even talking from my own experience. Like, and I'm talking from the heart here because I love this community and I love you guys. And I'm telling you this because these are things that I had to deal with. Like, I kept my trading secret for years. Like, it's only now that with launching Project Lowdown that people know that I trade. Like, there are people in my personal life that had no clue. And even now, you can see who's supportive and who isn't. And the results will be shocking and eye-opening for you. But at the end of the day, that doesn't dictate your why. You don't like, and at the end of the day also, like, who gives a shit? Like, these people didn't think two thoughts about you beforehand. So why are you letting their opinion dictate anything you do now? I just wanted to stress that point. Like, do it for you. My why is, I wanted to create the generational wealth. I wanted to retire my mom. I wanted to live a life where I wanted more than, okay, I'm going to be an employee for the next man for the next 30 years, get a pension, work my way towards paying a mortgage off over 30 years, and then fucking die. That's not living a life for me. I wanted more. I wanted time freedom because time is something you can't get back. So if this FX thing was a way to break the mold or break the system, I was like, well, what have I got to lose? Because the alternative is definitely what I don't want to do. So I didn't have a choice. So for me, it was like, I'm going to make this work because I don't like the alternative. Because the people that you work for, I mean, Paul is an exception because he's his own boss. But for the majority of us who, would do the whole corporate thing and you have a boss, your boss, like my old boss, billionaire, just chilling, like makes millions per hour, chilling while everyone else is being his employee. Right? Why can't you be him? With this trading thing, at least it gives you the opportunity to be your own boss. With relatively little startup cost, you don't need to, own a brick and mortar store. You don't need to deal with, employees. You don't need to deal with all this stuff, right? There's nothing wrong with the 9 to 5. I'm just saying that, you can think more than that. I still did the 9 to 5 while still figuring out this trading thing. So I'm testament to show you that it's possible. It won't be easy, but it's possible. So not to like rant on and on and on, but the main thing I'm just trying to say is figure out your why, do it for you. Haters will always be there. Haters will always chat their shit. Who cares? Like, their opinion is irrelevant. Because as soon as you start getting success, guess what? Now they ask you, how? Teach me. Help me. But they're the first people to, tear you down. Right? So focus on you. And that's all is important. And achieving your why. Because you want to live the life that you want to live and you want to write your own story. That's all I wanted to say. So it's been a long call. I think it's been a good call. The playbook stuff, I think will help people. The playbook stuff will keep you honest, will keep you deviating from your plan. You focus on the playbook only. So yeah, it takes time, as you saw. We spent like an hour to just do one play. Grind out, get it done, even if it means, you don't trade for a week or whatever, so be it. You're better off having a playbook and trading off that than like YOLOing all the time. Because then, you can't keep yourself honest. The playbook keeps you in check. If you don't see it in your playbook, it doesn't exist as a trade. So don't trade it. And the play exists in terms of like as a valid play because it's in your playbook and you can literally see it previously on a chart. So what you're looking for isn't crazy. That's why it's so important to do. And that's why you have to do it for yourself. That's why it's no good for me to give you my playbook because that's the way I see the market. You need to have a playbook relative to the way you see the market with the entry models given. It has to be personalized. It can't be spoon-fed. Either you do it or you don't. You can't cheat the system here. So yeah. Cool. All right, guys. Great call. Will be uploaded probably in a couple of days. And yeah, have a good one. And I will see you guys next week. All right. Bye, guys.